Okay, so last time we left off of market structure and how market structure is made. You know what I'm saying? So now that we understand that standpoint, let's go ahead and continue with the next. So we got market structure, right? We understand the concept of bullish market structure, right? Okay, and then vice versa for bearish market structure. We understand that this is an expansion leg. We understand that this is a rotation leg. If you watched the previous episodes in order from 1 to 5, which is this being the 5th one, right? Then you won't be lost in what I'm saying right now. You know what I mean? If you haven't watched it in order, if you skip episode 4, if you skip episode 3, episode 2, then episode 5 would be hard to understand. So please make sure to watch all the joints in order. You know what I mean? So that way you can understand episode 5. But we have an expansion leg here, retracement leg, expansion leg, retracement leg, expansion leg, retracement leg, expansion leg, retracement leg, expansion leg, right? But remember that we focus on the highest swing high of the expansion leg before it gets into a retracement leg. And then we focus on the lowest swing low in the retracement leg before we get back into an expansion leg. And the process repeats, right? And the expansion leg is going to retrace back into the range of the current expansion. That's the expansion leg. My fault. The retracement leg will retrace back into the range of the current expansion leg, right? So if we have this retracement leg, then it's going to retrace back into this expansion leg. And we have this retracement leg, it's going to retrace back into the range of this expansion leg, right? So each retracement leg retraces back into the range of the current expansion leg before expanding higher. So we understand that concept, and then the same thing for downtrends, right? All right, so we got lower highs and then lower lows, right? Expansion to retracement, retracing back into the range of the current expansion leg, to the next expansion, to the next retracement, to the next expansion, to the next retracement, making downtrend, right? Bearish market structure, right? We look for the lowest swing low of the expansion leg before it goes into rotation leg, and we look for the highest swing high in the rotation leg before it goes back into an expansion leg, and the process repeats. That's what we're looking for in a bearish downtrend, bearish market structure. All right, so we got bullish market structure, bearish market structure. Now we understand exactly how to identify uptrends, downtrends, right? And also consolidations. With consolidations having relative equal highs and relative equal lows, right? Not really going nowhere. Okay. Consolidations will also happen during uptrends and downtrends, which is what I also went over last episode, episode 4. So this episode we're going to talk about reversals and breaks in market structure, right? So an uptrend can't go on and on and on and on forever, right? Eventually, it's going to go back into a downtrend. Now, what does it look like when an uptrend transitions into a downtrend? When an uptrend turns into a downtrend, or when a downtrend turns into an uptrend, right? What does that look like? I'll show you. So we're going to start with an uptrend, okay? An uptrend going into a downtrend, right? This is what you call a reversal, all right? So we're going to have expansion, retracement, to an expansion, to an retracement, to an expansion, to an retracement, to an expansion, to an retracement, to an expansion. Now, we'll do one more. All right. Now we are in an uptrend here, okay? We see how we have higher highs and higher lows, right? No low taken out the previous lows, right? We keep on taking out highs, making higher highs, right? That's what we want to see in an uptrend. When it transitions into a bearish market structure, this is what we're going to see. So we got expansion leg, retracement leg, expansion leg, right? We would expect this to be retracement leg, right? But if we're going into a downtrend, it'd be like this. See that? So this is what a reversal look like. And the key point would be here. All right, let me go ahead and take that off, and then let me turn this to orange. All right, so this part right here is that right there. Is the key point that went from bullish order flow, right, bullish market structure, to bearish order flow or bearish market structure, right? Once price crossed this retracement low, because again, when we're in an uptrend, we don't want to see price take out previous retracement lows, right? We want to see these lows remain intact. We don't want to see price take them out. When price takes them out right there, and then we have, so this turns into, this is not a retracement leg right here, this is an expansion leg, taking out the previous retracement leg low. Then we go into a retracement leg, and then we expand lower. See that? So we went from expansion leg, retracement leg, expansion leg, retracement leg, expansion, retracement, expansion, retracement, expansion, retracement, expansion, right? To an expansion. So it's an expansion to another expansion, but this is a bullish expansion into a bearish expansion. Now, we're not going to know, right? Like right here, we might think it's another retracement to a bullish. Now, later in the stages, I'm going to help show how you can predict or anticipate a reversal that's about to take form or happen. You know what I'm saying? But till then, we're not there yet. So once price crosses this swing low right here, that's when it's like, okay, we just took out a retracement low, right? That's a shift or break in market structure. So for right now, for reversal, we're gonna call this a break in market structure, okay? From bullish market structure, then price takes the previous low out, it broke market structure. Now we're into bearish market structure. So you see that transition? We call this a breaker, right? So a breaker is short for a break in market structure, right? Where we have a high, low, higher high. We would expect a higher low before going back into another higher high, but we have a high, low, higher high into a lower low. So this is a break in market structure, hence a breaker, right? Then price will retrace back into the range of this expansion leg, as well as back into the point price has broken market structure in. Okay, but for right now, just focus on the range of the expansion leg. It's going to make a whole lot more sense when we start going into here, right? But this is what you call a break in market structure, going from an uptrend into a downtrend, a reversal, right? And a reversal happens when price, the market, has reached a important level, right? This black line representing many things that I'm gonna go over in later stages, right? So this is the part I'm talking about, where you can anticipate this level being reached, and once it's been reached, I can anticipate a reversal taking place, and there's gonna be certain confluences, certain confirmations, certain hints, right? Telltale signs that will help you be confident in believing that price could reverse at a certain point. You know what I'm saying? Again, that will be in later stages, right? Probably stage 5 or something like that. Maybe even stage 4. But that's what this is, okay? So this part right here where I circle that is the most important part, because this is the low that price took before going into a downtrend. All right. Right. So this is the part that I'd like you to focus on for this episode. Okay. Now, same thing for a downtrend. So we got this. All right. And then, boom. So you see that? So let's say right here, this could be just a retracement leg going into another expansion leg, right? But for a reversal and a downtrend going into an uptrend, you would see price take out that high. The second this high is taken, it's like, okay, boom. That's the first thing right there. Now, I'm not looking to sell. We've been in a downtrend, and let's say you've been selling, you've been shorting. Let's say, I'm gonna speak from my perspective. Let's say I've been shorting, I've been selling. Shorting is another term for selling. I'm just gonna let you know right now, there's a lot of terms that traders use, or that's used in the trading world, that could mean the same thing as another term, right? So sell and short have the same exact meaning, but there's just, different terms that traders would prefer to use than the simple terms. You know what I'm saying? So there's selling, there's shorting, then there's buying, and then longing, right? So you're going short for a sell, or you're going long for a buy, right? Do I understand why they use short for sell? No. I understand why they use long for buy? I don't know. I'm gonna be honest with you. But that's what's going on. You know what I'm saying? So now let's say I'm selling, right? I'm selling this downtrend, and I'm following the market structure, right? We're going to an expansion to retracement to an expansion to retracement. Okay, we're good. This is what I like to see, right? The second this happens, I may want to get out, because that's something you don't want to see. Whenever we see an expansion past the previous retracement high, that right there is saying, okay, the market could be turning around. We take this high, now price expand, retrace, expand, retrace, expand, retrace, expand, right? So now we see transition, right, from an uptrend into a downtrend. And this right here, a break in market structure, where we have, let's say, price reached a key point or an important point, and price turns around, taking out the swing high. Okay. Right. Like that. Again, if we're in a downtrend, we do not want to see lower highs taken out. We do not want to see retracement leg highs taken out. We want to see these highs stay intact. And we want to see expansion leg lows being taken out, making lower lows. The second we see price take out this retracement leg high, right, where we have a low, high, lower low to a higher high, that is a breaker, short for a break in market structure. So that's what a reversal look like. This part right here is what a reversal look like. Super important. All right. So let's go ahead and go into the market. Replay this video as many times as you need. All right. As many times as you need. Okay. All right. This is probably the best example. I just found one. Okay. Now, if you also been doing, your own homework, because pretty much what the homework is for you to go into the chart yourself and investigate yourself, right? I don't want you to take my word for all this stuff. I want you to go into the chart and find out yourself on whether or not what I'm saying is true. You know what I'm saying? The person I'm taught by, my mentor, he doesn't like the concept of followers following the follower, right? He wants to make people, or not make people, but develop people and having a mind of their own. Not being like, kind of like sheep in a way, just being swayed just because someone says so. You know what I'm saying? A lot of people, when they don't see something pan out the way they expect it to, or things like that, just because they took someone else's word without doing the homework and seeing it for themselves, will then blame that person. Well, it's this person's fault that I lost this money, or it's this person's fault that I got into a worse situation. It's no one's fault but yours. You know what I'm saying? That's one thing I've learned from my mentor. So if you choose to just not do this like investigation or homework and stuff like that, then I can't be at fault for whatever's happened. And go into the chart yourself and investigate for yourself. Because once you see it, that's all that matters. It don't matter like what else anyone says. If someone says there's no such thing as market structure, okay, let them believe that. Like it's like, you go to Paris and see the Eiffel Tower. And then you come back and you say, yo, the Eiffel Tower is amazing. And someone says there's no Eiffel Tower. It's non-existent. All right. I'm not even going, you don't even gotta argue. Like, you know what you saw. Like, you know what I mean? You was there. Like, you see it. I don't got to convince or show to you anymore about whether or not all this is actually true, market structure and the whole nine, because you done the work to where you don't need no more convincing because you see it yourself. But that'll only happen if you do the work. And now, if you're doing the work, great job. And I know you're already seeing it. You know what I'm saying? So that's great. That's great, honestly. And that's a great quality to have that I don't even gotta, tell you this. Like you already got that quality about yourself. That's a great job. Anyone that hasn't, please do. You know what I'm saying? I'm not even saying this like as if, I wasn't from that same boat, because I was. You know what I'm saying? I tried to, not do the homework, learn from my mentor, and just kind of just binge watching. You know what I'm saying? Like it's a Netflix series or something. And I'm telling you, it does not work that way. It just don't. It don't. You know what I mean? So thankfully, it didn't take me long to then come around and do the process right. But I'm saying this so you could just go ahead and do it right the first time. You don't gotta go through all this. You know what I'm saying? Because like, what's the point of wasting all this time doing the wrong way just so you gotta come back again and do the right way if you're really trying to do this? You feel me? So I just want to go ahead and add that in there. But yeah. So same thing with this. You see this stuff. That's all that matters. That's all that matters. But please, if I don't say any homework at the end of the video, that doesn't mean that there isn't any homework, right? The homework is up to you and how much you want to go back in the chart to investigate this stuff. I know I didn't say like for episode 4 how many downtrends and how many uptrends you should be looking at. Like it really just depends on you. Some people get it quick, right? Some people, it might take, 10, 20 uptrends and downtrends for them to actually see it. Some people might have to take 50, 100. Everyone's process are different. How everyone thinks is different. So I kind of leave it up to you on the quantity of examples for you to see in the chart. You know what I mean? But I just go ahead and show the example in the episode on what it looks like, so that way you can go in, relate that, and compare it, and it's like, oh, okay, I see one. And then just like, now you know what that looked like, find as many as you can. Whatever number that is up to you. But the goal is to go back and investigate for yourself on whether or not what I'm saying is true or false. But yeah, back to this. So here's an example right here, right? Now, it's up to you on where you can find the expansion leg to the retracement leg to the expansion leg to the retracement leg. But what we do know is that this whole thing right here is a downtrend, right? This right here, we know that this is a downtrend. And then we know that this is an uptrend, right? So we got a downtrend going into the uptrend. Now, in this transition, what we're looking for is the break in market structure, okay? So I'm gonna give you some examples. So we have downtrend, right? Now, when price went into an uptrend, we have to find where is the last retracement leg high of the downtrend. You know what I'm saying? So we have expansion leg. We're just gonna go ahead because we have little retracements, but we're just gonna go ahead and just generalize it. Expansion leg lower, retracement leg higher, to expansion leg lower, to retracement leg higher, to an expansion leg lower. This is the highest retracement leg of that, of this run. This is the last retracement leg. Expansion leg, retracement leg, expansion leg, retracement leg, expansion leg. This is the last retracement leg high. So it's not to here where price crossed over and turned into an uptrend. All right, this high right here, it's like going to an expansion to a retracement. But remember how I shared in last episode, when we have a retracement leg high and we have an expansion leg low, and price has not taken either one of these two out, these two levels, we wait, we don't do anything. So price retrace, but we don't see an expansion leg lower. It stops here, so we wait until one of these two levels is taken. And what price do? Comes up and takes this high. So now it's like, okay, this could be an uptrend. And then that's when we have an expansion to a retracement to an expansion to a retracement to an expansion to a retracement, uptrend, right? Whenever you see an expansion, retracement to another expansion, that's when you able to understand market structure. You don't have to see multiple expansions and multiple retracements for you to then understand, oh, it's a bullish or bearish market structure. All you have to see is expansion to retracement to expansion. And I'll share it more deeply on that, you know, to really show how many of these moves you could really see in later episodes. But we go into an uptrend, right? But this part right here is what's important. Right? Okay? That's what's most important right here. And this could be that key level I was talking about. Right? This being an important place right here. Okay? I'm not going to share yet what this could be into, again, later stages. So this is an important place. Now, I just drew this randomly. But there is an actual, it's like right here, this is actually an important place, important level that price has hit before reversing. You know what I'm saying? So before price reverse, it's going to hit an important level. You know what I'm saying? There's always a reason for why price does certain things. Yeah, again, that'll be shared in different further stages. But I just want to show you what it looks like with actual candlesticks and how it relates to the schematic that was shown down there. You know what I'm saying? So if you haven't taken a screenshot of it, feel free to go back and take a screenshot of that. But that's what it looked like. All right. So that's an example for an uptrend. Okay. If you already did your own homework for the last episode and your own homework for the previous episode and your own homework for the last, like if you already did your own homework for each episode, then you should already, you know what I'm saying? See downtrends, retracement legs, expansion legs, you know, right? For this episode, the homework would be going back and investigating on seeing this. Breaking market structure, breakers, okay? Finding the breakers, all right? So now we're gonna do the same thing for a uptrend going into a downtrend. All right, this one is kind of temporary, but this will do. That's all we're looking for. We're not looking for how long the uptrend is. We're not looking for how long the downtrend is. We're looking for the transition of an uptrend going to a downtrend. Uptrend here, right? Downtrend here. Okay. You can see the expansion to retracement to an expansion to an retracement. You know what I'm saying? And you could pinpoint, like, we could generalize it to we have an expansion to retracement, or if you want to do it to an expansion, retracement, expansion, retracement. We're going to go too simple, but expansion to retracement to an 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 expansion. Okay. Now, when we went into a downtrend, now it's not a long downtrend, because we see how we went to a downtrend and then shortly after back into an uptrend, right? But again, it doesn't matter how long the downtrend is or how long the uptrend is. What matters is if you can see the reversal of price going from an uptrend into a downtrend. So before price went to a downtrend, the last place that price had a retracement low is here. Okay. All right. Now we could really, again, there's an earlier place where price has broken market structure. But just to make it simple to see it, we have a retracement, a high, then you have a retracement leg low, so a high, low, into a higher high, right? So the lower low we made past this low, right? And price tapped it here, but doesn't go lower, right? So it's not to where it retraces and then boom, comes lower. It gets interesting. I'm telling you, in later stages, that's where all the good stuff's at. I'm trying to tell you. So let's go ahead and draw this out with a circle. All right. Price has crossed an important level, like shown on this schematic earlier. Okay. Say price reached an important place here. Right. Again, it's a reason to why price reaches a certain place, then reverses. Now this, okay, I'm not trying to rush. I'm not trying to rush, because I just, all right. We're just gonna focus on this, okay? Price comes down, okay, and we have this expansion leg high, all right, and this retracement leg low. After this expansion leg high made, and we go lower, and we're basically, we're gauging whether or not this is a retracement leg or a reversal. We're looking at these two levels. So price, let's say right here, is in between these two levels. We don't do nothing until we see one of these two levels taken, right? So if price doesn't take this high out to continue the expansion, then it's going to take this low out. Like I said, it's either one or two things. Price either going to go up or it's going to go down, all right? So the best thing, like how I shared in the previous episodes, is patience, waiting. And then what we see price go lower, breaking this low. Now, what I wanted to share is let me go ahead and share this. We took this high here, right? This high was taken. So we expanded. Now, this might be a little tricky, but if you can see it, then good job. We took that high. So this is the most obvious one, but there is another retracement leg low above this low, a higher low, right? It wouldn't be this one, okay, because this high did not take this high out, right? So we got a high, low. This don't matter, because we're trying to see if price goes above this high or goes below this low. It does not go below this low. So what it do? It goes above this high. Now that price has crossed this high, what's the next retracement leg? Low. It's real small, but it will be this right here. Let me go ahead and expand it. Okay. You see that? So price comes up, expansion leg high, comes down, retrace. Small retracement leg. Small retracement leg. But a retracement leg nonetheless. Okay. retracement leg low here to an expansion higher. So we have an expansion leg higher, and what price do? It comes down, and what did it take out? This low right here. It's literally a tick lower than this low, but it took that low out. Then it retraces, but does it retrace? Does it go past this high? No. Okay, and then price what it do? Shoots further down. So we have an expansion, taking out this low, to a retracement, to an expansion. See that? Right? So depending on how good and how often you see it and how detailed you can read this would help you get into a trade earlier. Let's say if you already see it, and let's say it retraced, and let's say you got in here. Now this, again, it takes practice, but let's just hypothetically, let's say I saw this, right? It got below this retracement low, even though it's a tick lower, it still made a lower low. And I get in here. And let's say my target is somewhere around here, and I get out here. Wouldn't this be a better entry if I did see this and I was able to enter there, rather than just, I see the obvious. So depending on how much you can see this and how detailed you can see this will also result in how early you can get into a trade because of the work you put in to see it. Now, you don't have to put that much work in to see this little small retracement leg. You could just wait until price cross this retracement leg low, because it's obvious. It's just an obvious one. You know what I'm saying? But that's the work. You know what I'm saying? Let's say you saw this. Now you can get in here. Let's say I could get in here and I could hold, right? Rather than me getting in here and I can still hold, but it's less of a run than me getting in here. Now this, for me personally, is a personal preference of me like to get in early. But let me tell you this right now. People who get in here still make a ton of money. A ton of money. Okay? So it's not like as if you get in here and because you got, let's say, a less of a run than I would if I got in here, you would make a little bit more. No. You could still get a great piece of a pie of the amount of money you can be making. Even if it's something as simple as this. You just find the obvious retracement leg low, you wait for that to cross, you get in, boom. Right? It's just that if you were to go in earlier, let's say I would go earlier, I'll just make even more so money. Whichever one, right? You could still be very well off financially. Right? So you don't have to be, it's like I said, previous episodes earlier. You don't have to be super advanced to make a ton of money. You could be at a lower level, but as long as you understand the fundamentals and how the market works, you don't have to be super advanced to make a ton of money. All right? It all just depends on your personality and the type of person you are. You know what I'm saying? So I just want to share that. But I also just want to share how there was a retracement leg low after this one. This was just an obvious one. You know what I'm saying? But I just want to share, in doing the work, if you want to be advanced, you can always see something like this that, let's say, the casual trader wouldn't see. And that's the result of putting in the work. You know what I'm saying? So now what I also wanted to add real quick is this is the same run, okay? From the uptrend into a downtrend, right? Now we see how this low never took out this low. You see that? See that? This is a whole uptrend. This is a whole uptrend. This is a higher time frame uptrend. Okay, so real quick, just so you're not lost, this is a higher time frame uptrend or an uptrend on a larger scale. But this right here, see this small uptrend into a retracement downtrend, this is that point that we just went over. You know what I'm saying? Where I highlighted it, the reversal, the breaker, right? And talk about how you could get in early or get in a little later, but still catch a decent run, right? This is that same point right here. It's just when we zoomed out, it's inside of a larger picture. So yeah, all right, back to you, Matt. Right. So even if you are in a higher time frame uptrend, you can still find downtrends. That's a higher time frame retracement leg, but a lower time frame reversal. Now, I probably, messed some heads up just now. But as we go further in, you know what I'm saying, you understand what I'm saying. All right. But I just want to go ahead and put that out there right now. Okay. All right. that would I was trying to decide whether or not I want to say that, but you don't gotta focus on that last part I just said. The focus for this episode is the breaking market structure. But I just want to go ahead and add a little gem there for future references. So that way, after you learn, stage 4, stage 5, you can come back to this and be like, yo, this is what Matt was talking about. You know what I'm saying? So, yeah, that's gonna do it. Hope you understand what I was sharing. And again, please investigate this stuff for yourself. Cause that's how the application works. You know what I'm saying? And see if I'm wrong or see if I'm right. Yeah. So this was breaking market structure, aka the breaker, and that's how you can find reversals going from a downtrend to an uptrend or uptrend to a downtrend. We'll be on episode 6 next time, and we'll be talking about what I just pointed out a little minute ago about reversals, but a retracement leg being a lower time frame reversal. It's gonna be on some matrix trippy. You know what I'm saying? But yeah. All right, peace.